So for today's podcast, we're going to be talking with James Hastings. James is a California tax attorney with over 25 years of experience, and he's one of those rare people who is both a CPA and an attorney, and he actually likes both of those. He's a certified specialist in tax law. He runs his own law practice out of San Francisco, where he works with high net worth families, entrepreneurs, and closely held businesses. But what makes James especially interesting to talk to today is his current role as the Director of Tax Strategies at Secured Carbon, an AI-driven fintech platform that automates tax credit validation and transfers for clean energy projects under the Inflation Reduction Act. He's been on both sides, advising clients as an attorney and building tech products as a founder. Today, we're going to dig into what the One Big Beautiful Bill means for tax credits, what it's like going from practicing law to becoming a tech founder, and how AI is changing tax preparation and tax mitigation. Welcome, James. So anyway, let me just kind of jump in. I think we've got some basic questions. Is there anything you particularly want to cover or talk about here while we're is there anything you particularly want to hit on? Is there anything you want to say? Is there anything you're doing that you feel like you want to kind of get the word out about?
No, not in particular. I mean, the most interesting about this, most interesting thing about this, and it's just got such broad application, is the Loper Bright opinion. I mean, I think that, but that's more geeky and wonky. That's more about tax stuff. That isn't so much about tax credits. But I mean, that's something that's been I've been interested in for a couple of years, but that's not necessarily tax credits. I'm really interested to hear what you're doing and what your clients look like, and I mean, really what you've been up to. I mean, I know you're doing the same things, but I mean, you seem to be much more technically adept at this than. I mean, every time we have conversations, you're just a wealth of information.
No, I certainly appreciate that. What's that wonky thing that you wanted to talk? Like, what is that? What's it? Some decision? Like, again, fill me in on that.
It's the Chevron deference, the Loper Bright opinion.
That says what now? What is that, and how does that? Like, what's interesting about it?
So what it deals with is it's called the Chevron deference, and it's from a Supreme Court case, Chevron versus, I'm not exactly sure, but it's the Supreme Court opinion that says that when the law is uncertain, the body that interprets that is going to be the executive branch. So it's going to be the executive agency. So, for example, environmental protection laws, if the law is somewhat vague or uncertain, then it's going to be the EPA that is going to interpret that law and turn it into the execution of the law. And why that's important in tax is that tax is enormously complicated, and sometimes the tax laws are not clear, as is the case here with the tax credits and the One Big Beautiful Bill and the solar credits and so on and so forth. Those things, and there was a lot of interpretation when Section 6418 and the Infrastructure Act was passed. A lot of room for interpretation that was looking at the practitioners and the people in the market were looking to the IRS to give some guidance about how these were going to be enacted. And the Loper Bright case, when the Supreme Court came up to that, shot that down and said that it's not the executive branches that are going to interpret those laws. It's going to be the judicial branch. So on one hand, there's the argument is that the Chevron deference, meaning that the executive branches are going to interpret the legislative act, interpret the laws, somehow was a power grab. But it's actually the other way around, where the courts have now seized that power from the executive branch. So it's been an interesting shift in the governmental dynamic between the legislative, the judicial, and the executive branch. I haven't seen how that's really going to change the interpretation of, as we're talking about here, about the tax credit laws. But it's been just a monumental shift for tax law and tax credits overall. And it's going to be interesting to see how that turns out. And the argument against that is judges are not subject matter experts. It's the IRS and the EPA and the Department of Energy. Those are the people that should be interpreting these laws and turning them into actionable guidance for the rest of us to do what we do.
Do you think they'll need to set up, like, how they have patent courts and they have like special courts for patent? Will they have to set up like an EPA court or an IR. I mean, they already have an IRS court, right? I mean, is that
Right.
how you fight the IRS?
Yeah, there's the tax court, and you're right. That's specialized judges that are trained to deal with tax law. I'm not sure, but yeah, that's be an interesting way to go. So not only would you have subject matter experts in the executive branch, but you would end up with judicial experts in the judicial branch as well.
Yes, unfortunately, we live in that sophisticated of a world, don't we? It's not like general principle now. So are you up to date on in the tax credit world on like FIAC and some of that like domestic manufacturing and kind of domestic content? Are you familiar with kind of what and the FIAC rules from the big beautiful bill? I just call it OB3 now because I don't want to say big beautiful bill. That seems so stupid.
OB3, I like it. I'm gonna adopt that.
Yeah.
About the actual details, no. The people that I'm dealing with are not looking at the specifications of that, but it is coming up in so many different ways. And what I'm finding in the people that we're working with is that supply chain is just polluted is not the right word. It's tainted. From beginning to end, it seems like there is some sort of foreign participation in the supply chain and in these manufacturing chains that's really hard to disentangle and to segregate so that the tax credits end up, being maximized the best that they can. So it's been confusing, I guess, complicating. It's been complicating.
Mm-hmm.
I mean, in the deals that you're working at, how have you found it?
Everybody's worried about FIAC and all the agreements that we've seen for pre-purchase or off-take purchase all have FIAC language. And it's like, all to the best of our knowledge, you'll operate to the best of your ability, sort of, we're going to basically sort of walk hand in hand. I've seen manufacturers and suppliers stocking items in advance, like they bought extra last year, enough to go through this year, so they could be grandfathered on those. And people broke ground last year, so they wouldn't have to be affected. They could be grandfathered on FIAC for this year, sort of buying themselves time. And then I would imagine that they would then sell that equipment at a slightly higher price, or, they wouldn't give them a discount for saying, hey, this is FIAC grandfathered or whatever. I've seen a little bit of that sort of shifting things left pocket, right pocket, same pair of pants kind of theory. And then I've seen on the domestic content side, I've seen a lot of action. I went to a conference a couple of weeks ago in Houston that was mostly an equipment conference. It was kind of like Texas Solar players, right? So it was all just gear vendors and everybody that I talked to, I would just go up to them and just go, do you guys do domestic content? Do you have a domestic content bonus? And I would say probably 2/3 of them said yes. Now, the answer was either, yeah, we're completely domestic content. We moved all our manufacturing over here, or yeah, we're doing manufacturing here, or they were always doing it here, or whatever. Or they were like, yes, we have 7 product lines that are made in China, and then we have 1 product line we're moving over here. And the ones that didn't have domestic content all indicated that they would soon have domestic content in the next year or so. So all of them were trying to set up brick and mortar here, or they had already done it for some part of their product line. I think that's going to grow. And to give kind of credit where credit's due, I do think that the IRA's carrot approach, right? For, here's this carrot for the domestic content, you get some bonus. And the Trump tariff sort of stick approach, I think has been incredibly effective within renewable energy. Like I said, all of them are pushing toward it. And all of the kind of hardware vendors, like the roof mounting guys, all the light, all that kind of steel and stuff, that all has to be 100% domestic already. So that's the rule is so all of those players are domestic. So again, that's not really high value stuff. It's not like the chips and the solar panel arrays and stuff. But initially when it passed, people were like, oh, there's no such thing as inverters. Well, now there are. There's 3 companies that have American made inverters. they're like, oh, there's no switching. Well, now there's two or three companies that do that. There's panel companies. I think they're doing panel assembly. They're not doing the like full blown panel, but they're at 50 or 55% this year. So, and I've seen a bunch of credits where they were like 47%. And I was like, guys, that doesn't count. Like you can't, I'm sorry, it's 50 or 50.1, but like go buy something else that's American. I don't care if you buy American made water bottles, like go get some of those, expensive water bottles and pass those out, like do something, right? But they were like, right on the edge. And so I assume by next year they'll have figured out how to put enough pieces in place, but like I said, it's working, which good. It's not working quick enough. And it's certainly not, I don't think, widespread, but it is at least within renewable energy working. And look, what are you paying out there for gas? When you're in California, what are you paying for gas? $6? You at $6 yet?
It's close to 6, 50 and a half at least, or 5.5.
Yeah, I have diesel, so I paid $5.60 for diesel in New Mexico a couple of days ago, and that was a kick in the gut. But it's been, it's normally like $4 here, so it's up a huge amount. I think that's I hate to say that's gonna benefit. There's a benefit to it. I hope the price goes down and we get back to cheap gas because it hurts people that can't afford it. But it is going to help get people over the fence on solar, businesses especially. Like, I mean, how do you deal with a business like transportation, trucking, whatever, where your price just went up 30%, your cost went up 30%? You have a fixed contract to deliver. Like these guys are working, months and years ahead on. They have to buy fuel now today for a shipment that they committed to 6 months ago, thinking the price would be relatively the same, and they may not hedge that. So again, this could be a real problem, but I think it's going to drive more adoption of renewable energy with or without a tax credit. I think it is. No, I think there was one time where you said you were doing CPA work, you become a CPA, and then there were a bunch of lawyers that all left at 5 and you were there till like 11.
Exactly right. Yeah.
So fill me in on that. Give me the long version.
So I was working in public accounting and we were doing some securities issues. And so we were downtown in financial district up in, 20th some odd floor of some skyscraper, big conference room. Excuse me. We're going through all these securities documents. And on one side of the table with lawyers, the other side of the CPAs. They're making a bunch of changes. We're auditing all these things. And it was 5 or 6 o'clock. Lawyers went home. We were there until 2 o'clock in the morning, ticking and tying the numbers. And I knew how much they were getting paid because they were all in the numbers. I thought, that's it. I'm on the wrong side of the table. It just jumped to the other side because it wasn't fair. That's what it was. It wasn't fair.
Yeah. So then you went to law school and became a tax attorney. And was that kind of always your plan? Like you were like, I'm going to do tax law. Like, is that what you do when you have a CPA? Or could you do mergers? Like, again, like this is something you knew going in from their public accounting days?
Yeah, so I started in public accounting. It's just I've always been interested in tax, and that was one of the shifts, looking at what the CPAs did compared to what the lawyers did. And I went to law school specifically to become a tax lawyer. And I think, there's some things about that are very interesting. And that's one of them is that the people that do tax law tend to really enjoy what they do. And I think the reason is because nobody becomes a tax lawyer by accident. In a lot of cases, people become family lawyers or defense lawyers because that was the first job that they got out of law school. And that was it. And that's what their career looks like now. Nobody just kind of accidentally becomes a tax lawyer. So the people that do that kind of work, I think, really enjoy it. And I do. And so it was a deliberate choice to get the kind of a tax specialization, or I took tax electives in law school. And then I did the postgraduate degree, the LLM in taxation, which is sort of a next level, much more detailed into things like M&A and triangular mergers and things of that nature, estate planning, things that are a little bit more detailed. And, I tell people about my academic and professional experience, mostly because it just kind of indicates how much I like it. This is definitely something I chose to do and something I enjoy doing.
And sometimes you fight the IRS, or do you always fight the IRS?
The interesting thing about being a tax lawyer, people ask me what I do, and it just, in my opinion, tax just touches everything. Just, fundamentally think about what we're talking about with clean energy manufacturing and clean energy development. This is driven or strongly influenced by tax and tax policy. And so, what do I do as a tax lawyer? Maybe everything, I mean, everything from tax consequences of mergers and acquisitions to construction, compensation, what state are you going to live in, so on and so forth. So my practice runs from income tax preparation to tax litigation and some civil litigation dealing with tax issues as well.
How much tax mitigation do you do?
At this point, I think it's about 30-40% of my practice, probably.
Does some of it, this is my view as kind of an outsider to it, so don't be insulted by this. Does it seem some of its tax mitigation seems real sketchy? Like it just seems a little kind of skeezy, like you're just like, it's like a complex game of 3-card Monte that you're playing and you try to juke the IRS, they're pointing at the card and you're like, nope, sorry.
It is, it's tax shelter adjacent. Yeah. I mean, yeah, I agree. There are things that are in the gray area. There are things in the black part of the gray area. It depends on where you are on that scale and exactly what things look like. And I mean, the reality is, unfortunately, the IRS just doesn't have the resources in order to police and enforce these laws. And so there are.
Oh no, that's terrible.
Well, there are wealthy people and wealthy companies that can hire very smart accountants and lawyers to put these things together that, I mean, in many cases, even if they're examined, even if there's an audit, the people that are working in the private sector, just their horsepower is just overwhelming compared to the people in the IRS, particularly now with the budget cutbacks. So many of the senior people and the senior experts, the subject matter experts in the IRS are now, retiring or leaving or being furloughed or however it is that they're leaving the organization. They just don't have the technical expertise in order to go up against somebody who's built a multinational global tax saving strategy that is so enormous that trying to unravel it or disassemble it is just almost impossible at this point.
Mm-hmm. And so do you think that CPAs, they're sort of, I don't say like kind of run of the mill CPAs, but just, an ordinary CPA, do you think that there's some trepidation on their part for investing in like recommending users to tax credits? Like, what do you think the objections are if you're a CPA to using a renewable energy tax credit?
Well, you and I have been talking about this for years. And, one of the things that turned out with the 6418, what I found and what you and I found in our work is that the CPAs in particular looked at it and said, this is too good to be true. And so obviously it wasn't, and they weren't interested in exploring that. But that reaction and that attitude is a reflection of the very conservative nature of public accounting. And again, one of the reasons I went into law rather than public accounting is that CPAs their job is really to keep their clients out of trouble, to keep them well into the white side of the black and white, make sure that they don't have to talk to the IRS ever. Whereas tax lawyers are trained as advocates, they're trained as client advocates and in the adversarial process. So you can take positions that are closer to the gray area and be able to look at things that are much more nuanced and make sure that there's an argument that you can really challenge or use the law to the best that you can without having to parrot back and just, leave money on the table if you need to. So I think for most CPAs, the very sophisticated ones, yes, they're going to be operating more like tax lawyers. The run-of-the-mill CPA is going to put their hands up, back away from something that looks like it's too good to be true, or maybe that they don't entirely understand it. And,
Mm-hmm.
a lot of the things that we're dealing with here fall into that category.
Mm-hmm. Yeah, it feels like, just to me, it feels like you have to be kind of an expert in a lot of things that are outside of the wheelhouse, even of tax, right? I mean, from our discussion of like 45Qs, carbon depository credits, like you really have to be like an oil and gas expert to even understand if
Right.
what you're dealing with is the correct thing. You don't even know. You look at this stuff, it's it's all Greek, right? So it's scientific information and EPA specific rules and, all sorts of. So I think the same thing. I think they see it and they just go, man, that's hardly even worth it for 5 or 10%, right? Do you think there's a level at which that becomes something that you just go, man, we just got to get through this. Like we're going to pay 15 million in tax or 10 million. Like, is there a level that you think, a number where you think individual or high net worth individual would say this is worth the trouble?
Yes, I do. I'm hesitating because, you know, big numbers are made up of lots of little ones. So if you've got a tax savings or a tax strategy that's going to save you 1 or 2%, is that worth it? Well, yeah. I mean, if you're saving more than it's going to spend you to take advantage of that tax savings. But if you've got 4 or 5 strategies that you can stack on top of each other, you can get 10, 20, 15% tax savings, whatever it is. Again, so long as the savings exceed the cost, the legal and the accounting and the compliance costs in order to take advantage of that tax savings, it's going to be worthwhile. But I mean, you're right. And looking at the 1% or the 2%, I mean, arguably the professionals have a responsibility to capture that credit for their clients if they're entitled to it. I mean, if it's something that's possible, so long as it's not going to cost more than the tax savings. So, and there are several of those sorts of scenarios where, again, you stack those things on top of each other, and you can turn small savings into very large savings. And I think a lot of people are taking advantage of that when they can.
So I've asked this sort of question from a few CPAs. Put it to you. What do you think the like 4 or 5 things most CPAs ignore or don't do that could save people money on their taxes?
Yes, that's a good question. We said earlier we were talking about tax mitigation strategies, uh, and then the word tax shelter. And I think a lot of people may hear the term tax shelter and they think about something that's, as you said earlier, sleazy or just distasteful in some ways. There are a lot of legal tax shelters, things that are well within the black letter of the law that are worth taking advantage of. And there are those that are a little bit more creative, but they're still within the law. They're still within the legislation. And so I think having a willingness to explore those opportunities without having that knee-jerk reaction that says, people say to themselves that this is not legitimate or this is not valid or this is somehow immoral or illegal. It's just not. There are tax savings and tax mitigation strategies and tax shelters that are easy to implement really once you get a handle of the basis of them. The base understanding of these sorts of transactions and these strategies are not very difficult, but it just takes a willingness to really be open to listening to the strategies and figuring out how you can implement them into your own affairs.
But give me an example of some tax things that are legal that most people, high net worth individuals could do, or people could plug in, small family offices, that sort of thing. Like, what are some kind of tips and tricks?
I mean, I think, yeah, it becomes more complicated. But when you start looking at tiered structures, when you start looking at holding companies that own operating companies, and the operating companies hold assets, and then you look at different sorts of shareholders or groups of shareholders, and who's the ultimate owner of those assets, and who are the beneficiaries of those, not only the economics but also the tax consequences of the tax value that comes off those things. There are a lot of really creative ways that you can put those things together so that each of those components ends up maximizing that fraction or that portion of the tax code that is most beneficial to them. So if you've got different companies, different entities, different sorts of corporations, LLCs, different assets, different industries, there are certain tax advantages, tax credits, depreciation, tax deductions that creates a whole basket of value. And then using these tiered structures and these complicated operating structures, you can carve up that basket and put it into those places where it's going to be used or going to be most valuable to those different parties. And that takes a sort of global view or very high altitude view of the structure and figuring out how to do that. And it takes some time, it takes some money to figure out, but it's a really powerful way to maximize the entire scope of the tax benefits within the tax code.
Where does that make sense? If you $1 million a year, 10 million a year, 100 million a year, like where does that sort of where would you say, okay, at this level, do this, at this higher income level, let's do, all the above, like again, kind of where do you start to think I should pay attention to this?
I mean, I think anybody in the high net worth category or, anybody who's in the 1, 2, even the 5%, top 5% of income and assets, if you're over 4 or 500,000 in income, depending on the character of the income, capital gain investment or whatever, I mean, you are with the net investment income tax And where I am in California and federal tax, you're paying more than 50%, 51 and change in percent of your income in a tax burden. I mean, anything you can do to carve that down is going to make sense. At that, I mean, anybody, a W-2 earner, no. But anybody who's got any sort of significant cash flows from different industries or different operations, different activities, all of these cash flows really, again, big numbers are made out of little ones. If there are, a handful of companies that are owned, different cash flows, figure out how to chisel all those down by 1, 2, 3, 5%. You're going to get under that 50%. You're going to end up with some sort of tax savings that is going to make difference. And as the numbers get bigger, the tax savings obviously get bigger. So there's a certain threshold. I'd say anybody in the, the $500,000 income range, anybody who's got significant investment income, it's worth looking at how you structure that and how you set that up in a way that's going to have long-term value overall. And I mean, we're not even talking about estate planning or succession planning or transactions and how you can build certain tax savings into that. Mm-hmm. Just looking at annual income tax and figuring out how you can structure that to take advantage of those little pieces, add them up, and there's going to be a significant difference.
What about people that are in the sort of professional class that I feel like are always kind of the target of any tax increase, that sort of doesn't fall on like the, Elon Musk's and the Bill Gates of the world, right? They have all sorts of, ways to control their income, but it always seems like it falls on the like doctor, lawyer, dentist, kind of those, high earning professionals. It feels like they don't have a lot of shelter. Like, is that kind of the case? Like, what's the good strategies for people like that are high income professionals, but not necessarily a W-2?
Yeah. So when I talk to my clients, there's the people that I can't help at all. And those are the people that are W-2 earners. If you just got wage income, there's very little you can do, very little planning or strategies you can do to tax savings. High earners, like you say, people that are, doctors, lawyers, dentists, those professionals that are probably earning a significant amount of their income from some sort of pass-through entity, whether it's an S Corp or an LLC or medical partnership, let's say. So long as those people are owners of some sort of entity, either as shareholders or members, or if they own their own business, that business entity, again, talking about these sort of tiered or, brother sister organizations, you've got the earner, the professional that is the income earner through an organization or through an entity. Pair that with, put the office into buy the office, put the office into an LLC and rent it to yourself and figure out how to extract income in a way that's tax advantaged. There is that's what do we call it? Middle class rich person. I'm not exactly sure what it is. It's not the person that's got, global investments or a huge portfolio of, private equity interests, but somebody who's earning their income from their personal or professional services. Those are people that can benefit from these sorts of transactions. And you're right that there are some things that are a little bit more sophisticated, a little bit more off the beaten path, but that people are going to be able to take advantage of. And so I would encourage, and if you come across these people as I do, encourage people to look at more creative ways to put their affairs together so that they can minimize their taxes. And there are lots of different ways to do it. And certainly the things that we're talking about are a piece of that puzzle.
Awesome. I have to go. But we can, if you want to continue this conversation at a different time or later. I love this. I love talking about tax mitigation strategy. It's a big part of kind of where I think we're going to provide some general value in the YouTube side and kind of where we want to basically talk about, the credits as a type of tax mitigation, right? But like you should know a little bit about all these other things. And so I think talking about those things is great. And I also like the idea of I'm not a tax attorney. I'm not a CPA. So like, let me bring on some people who are really good at that and, can provide real expertise in that area and some kind of free tips and tricks. So anyway, plus I want to continue with what we're doing on, what we're up to and kind of what you see in the marketplace and ITC, PTC type stuff.
Yeah, and I know you got to go, but I mean, just every time I talk to you, I end up just with a wealth of information. And you're much more steeped in the industry than I am. I'm looking at papers and tax code over here, where you're looking at more the transactional stuff and the deals and the trends in the market. So it's always fascinating to listen. I'm very sorry to be late today.
Same.
Let's do it again. And what we can do is maybe pick a technical topic or something that's a little bit more narrow that we can go more in depth on. That would be valuable to you and to the people that you're talking to.
Yeah, absolutely. Absolutely. Sounds great. Thanks, James. I appreciate it, man. And it's great to catch up with you as always. We'll talk soon.
Yeah, likewise. We'll talk soon.
Take care. Bye-bye.